Hi everyone, Joe Gentili from Left Tail Risk Advisors. So you've already bought an index universal life insurance policy, and let's assume that the policy is not performing up to expectations, that you were given an illustration showing that the policy will earn, let's say, 6.5% a year, and the actual amount that you're earning is far below that. That is clearly a disappointing outcome, and I want to go through some options that you may have if you're in that situation. So, as most people already know, if the policy is underperforming, there's a couple of things that jump to mind immediately that you can do. You could fund the policy more aggressively. So if the policy needs X amount of dollars to stay in force for life, assuming that there's a 6.5% return, if the policy is earning 3% instead, then you would need to kick in more money to have the policy stay in force for the same amount of time. So one option is to increase your funding if the policy is underperforming. Not really an attractive option for most people. It seems like you're paying more money for the same thing than you originally thought you were. So it's an option, not necessarily an attractive one. There is also the option of just surrendering the policy, cutting your losses, and walking away from it. For some folks, this may be an attractive option. They're okay, um, or at peace, I should say, with the idea that they feel like they made a mistake in buying the policy. They will take a loss on it and just simply move on. That the amount that you take as a loss is going to be dictated by the surrender fee that's associated with the policy, and that changes from policy to policy. So for some folks, it may be a complete loss. For other folks, it may be some money may be salvageable. This gets a little more complicated if you've premium financed the policy and you've borrowed money, so there may be additional costs associated with surrendering the policy if that's the case. So that is another option. Third option would be a tax-free 1035 exchange. So let's say that you got the policy and you got the policy by rolling in money from another policy into the IUL. If there's a lot of gain built up in that over the years, one way to um, minimize the loss of changing policies is to do what's called a 1035 exchange, where you could take the cash value that you've put into the IUL, transport it or transfer it into another policy, and you will not have to recognize the gain that's built up. So that's a good option for people if you have a lot of built up cash value. And finally, in addition to having Left Tail Risk Advisors, I'm also a partner in a law firm, and we focus on litigating life insurance cases on behalf of policyholders. So, if part of the story with getting this IUL in the first place is you feel like you were misled by the agent that sold you the policy or by the insurance carrier and their descriptions of the policy and how it works, litigation could be an option. For some folks, if they have a large enough loss, they may want to have an individual litigation, just them against the carrier or the agent. This comes up a lot, especially when premium financing is involved. Or for people that have more modest losses with a policy, not necessarily small, but not millions of dollars, then they may want to consider a class action, looking to see if the way that they were misled lends itself to being litigated in a class action. So that's an option too. Not a lot of agents obviously are going to suggest that as an option, but as an attorney, I can say that that is something that exists as a possibility as well, and it should at least be considered. So to recap, if you have an IUL that you bought, the policy is underperforming as to where you thought or planning it would be. Your options are to increase the funding in the policy to kind of bring it back in line with expectations. You could change the allocation of your indexes. So let's say you have a proprietary index and it's not performing well, you could allocate back to the S&P 500. So that is an option. You have the option to surrender the policy. You have the option to do a 1035 exchange, and litigation could be an option. So that is the universe of options that you have to deal with if you have a disappointing IUL policy. Any questions on this, please feel free to reach out, and I encourage you to like and subscribe for future videos on the topic. Thanks.